Welcome to our lecture on personal finance, taxes for individuals. Understanding taxes is crucial for making informed financial decisions, from investments to managing your income effectively. Our learning objectives today include understanding various types of taxes, how the U.S. federal income tax system operates, and identifying strategies to minimize your tax liability. Individuals encounter several types of taxes throughout their lives. These include income taxes, payroll taxes like Social Security and Medicare, property taxes, sales taxes, and capital gains taxes. For example, an individual earning $50,000 per year might pay 12% in federal income tax and 7.65% in payroll tax, plus potential state income tax. The U.S. income tax system is progressive, meaning higher income levels are taxed at higher rates. Taxable income is calculated by subtracting adjustments and deductions from your gross income. Consider a gross income of $60,000. After a standard deduction of $14,600 for a single filer, the taxable income becomes $45,400. The IRS then applies marginal tax rates to portions of this income, taxing different segments at varying percentages. Your tax rates and eligibility for credits are significantly influenced by your filing status. Common statuses include single, married filing jointly, and head of household. For instance, a single filer often pays higher taxes than a married couple filing jointly with the same income due to wider tax brackets and additional deductions available to joint filers. Taxpayers can choose between the standard deduction or itemizing deductions to reduce their taxable income as much as possible. Common itemized deductions include mortgage interest, state and local taxes up to $10,000, charitable donations, and medical expenses exceeding 7.5% of your adjusted gross income. If your itemized deductions total $17,000, choosing to itemize would save more than the standard deduction of $14,600 for a single filer. It's important to distinguish between tax deductions and tax credits. Deductions reduce your taxable income, while credits directly reduce the actual tax you owe. Examples of credits include the Child Tax Credit, offering up to $2,000 per child, the American Opportunity Credit for Education, up to $2,500, and the Earned Income Tax Credit for lower-income workers. To illustrate, if your tax bill is $3,000 and you qualify for a $1,500 credit, your new tax owed would be $1,500. Employers withhold taxes from your paychecks based on your Form W-4. If too much is withheld, you receive a refund. If too little, you will owe taxes. For example, if you earn $4,000 per month and $600 is withheld, but your total tax liability is $6,500, you would receive a $700 refund because $7,200 was paid. Several common tax forms are essential for filing. These include Form W-2 for wages, Form 1099 for other income, and Form 1040 as the main individual income tax return. Additionally, Schedule A is used for itemized deductions and Schedule B/D for interest, dividends, and capital gains. Tax-advantaged accounts allow individuals to legally reduce taxes while saving for specific goals. These include 401s, traditional IRAs, Roth IRAs, and health savings accounts. Traditional IRAs offer tax-deferred growth and potential deductions, while Roth IRAs feature after-tax contributions but tax-free growth and withdrawals. HS, as provide a triple tax benefit, deductible contributions, tax-free growth, and tax-free withdrawals for medical expenses. Avoid common mistakes such as forgetting to report all income sources, filing with incorrect Social Security numbers, or missing eligible credits and deductions. Also, Be sure to file on time and pay estimated taxes if you are self-employed to avoid penalties. To reduce mistakes, always file electronically and utilize resources like IRS Free File or reputable tax software. Understanding taxes helps individuals plan better, avoid penalties, and maximize take-home income. Effective planning ensures you pay only what you owe, nothing more. Key takeaways include learning the difference between deductions and credits, choosing the correct filing status, and utilizing tax-advantaged accounts. Remember to keep accurate records and plan for next year's taxes early. Proactive planning is your best strategy. We encourage you to estimate your federal tax liability using the IRS Tax Estimator and compare results under different filing statuses. Thank you for joining this lecture on personal finance, taxes for individuals. We hope this information empowers you to navigate the tax system with confidence.